Stack the shields, Warband. The tape moved overnight, and not in our favor. It is Monday, the 3rd of August, 2026. Tomorrow, the most secretive company in modern history has to open a book no outsider has ever read. Bitcoin trades at 62,500 as of 5:15 Eastern, down about 1%, sitting at the low end of the range it has defended for weeks. Our engine calls this regime risk-off and points it down, and Bitcoin's optimized trend is bearish this morning on our read of the InvestAnswers Decision Support System. Now hear the sequence, because it matters more than the level. Yesterday morning, I told you Bitcoin's trend turned green at 4 o'clock. It did. At 8 o'clock Sunday morning, it went red again. At 4 Sunday afternoon, green. At the stroke of midnight last night, red. 4 states in 20 hours. Solana rode the same swings. Green at 4 Sunday afternoon, red at 4 o'clock this morning, and it trades at $72. Do not read that as a signal. It is the opposite of one. That is a machine standing on a knife edge, reporting honestly that it cannot tell which side the weight falls on. And the correct response to a whipsaw is to stop asking the model what happens next and start asking what would have to be true for it to stop flipping. The answer is a range break, not a candle, a break, one more mark. Spot Bitcoin funds took net outflows for the week ending Friday, snapping a 3-week inflow streak. But look underneath it. BlackRock's fund took in $869 million on the week. The redemptions came from Fidelity and Grayscale. That is not institutions leaving. That is institutions consolidating into one door. Now to the thing that resolves tomorrow. SpaceX closed Friday at $108 a share. Understand what that number is. It is roughly 52% below the closing high it set 4 days after the June 12th listing, and about 20% below the $135 the shares were sold at. NBC reports it is now the most heavily shorted large capitalization stock in this market. The most valuable private company ever built went public 7 weeks ago and has been cut in half since. Tomorrow, it reports its first quarter as a public company, the June quarter. Consensus sits near $6.9 billion in revenue, up roughly 46% from the $4.7 billion it booked in the same quarter 1 year ago. But the revenue is not the story. Tomorrow, for the first time in the history of this company, SpaceX must disclose Starlink subscriber counts and Starlink margins. Sit with that. Every valuation any analyst has ever hung on this business was built on an estimate of a number that has never once been published. Tomorrow, the guessing ends. And 2 days behind it, on Thursday, the lockup expires, and better than $100 billion of insider stock becomes sellable. A first ever disclosure, a record short position, and $100 billion of supply, all inside 72 hours. That is not a stock. That is a powder magazine with 3 fuses running into it. Now mark the calendar behind the paper, because it decides what the paper has to carry. Starship's 13th flight went up on the 25th of July and went mostly right. All 33 engines on the 3rd generation booster lit and held, 20 satellites deployed. The 14th flight, the first fully orbital mission, and the first attempt to catch the ship itself on the tower, now stands no earlier than the 30th of September while they run down a landing burn engine failure. That pushes the next hardware proof past the print, past the lockup, and out of this quarter entirely. For 2 months, the entire investment case is Starlink's economics and nothing else, which is exactly the number they publish tomorrow. One house is not waiting on the paper. ARK bought SpaceX again on Friday, roughly $14.5 million worth, after $21 million the Monday before, on top of the $530 million it committed on day one. Cathie Wood has bought nearly every dip since the listing. When a house that publishes its trades every single day keeps stepping in front of the most shorted stock on the board, that is conviction, with a name signed under it. Now to a man who was right and got carried out anyway. Across the 30th and 31st of July, Leopold Aschenbrenner's $45 billion fund, built wholly on the thesis that artificial intelligence is the trade of this decade, took margin calls from Goldman Sachs, JP Morgan, and Bank of America. The fund was reportedly levered as high as 400%. Its long positions in the buildout fell. Its short positions in software squeezed against it. Both sides moved wrong in the same window, which is precisely what leverage is built to punish. Citadel bought the bulk of its public stock book in a single block trade, and the wreckage was not his alone. Goldman's basket of the most crowded hedge fund positions just had its worst month since 2001, trailing the market by roughly 12% in July. Here is the part I want burned into you. He was not wrong. The build-out he was betting on is real, and it is enormous. Amazon, Google, and Microsoft carry something near $1.7 trillion of combined backlog between them. Demand was never the problem. He had the thesis right and the balance sheet wrong, and this market does not grade those separately. It settles the borrowed one first. Steel beats parchment. A position you own outright is steel. It can fall 90%, and it is still yours on the other side of the fall. A position borrowed 400% against is parchment. Somebody else decides when you are finished. They do not consult you, and they do not care that you were right. Jordi Visser read that same wreckage yesterday and called it a cleansing event rather than the opening of a crash. The funds came into it up better than 10% on the year, which bought them room to unwind in order instead of in panic. His tell is whether the July 29th lows hold through a confirmation window running today through Friday. That is this week. Watch it. One last thing, and it settles an account I opened with you on Saturday. On Saturday, I told you a story was moving about Tesla's humanoid program aiming at 10 million units a year, and that I would not cite a rumor at this table however well it dressed. That still stands. There is no filing behind that figure, and it does not get repeated here. But here is what does have paper under it. On the 30th of July, Tesla built its 10 millionth vehicle at Fremont, and Musk has said on the record that the Optimus line now standing inside that same plant, installed in the floor space where the Model S and Model X were built, torn out in 46 days, has moved into production this quarter. The first units go to Tesla's own internal training program, not to customers. He called the ramp long and flat and named the China-dependent supply chain as the binding constraint. That is a far smaller claim than the rumor, and it is worth more because it is real. 10 million cars is proof that this company knows how to build a hard thing 10 million times. The question the humanoid program asks is whether that skill transfers. We will not learn the answer from a headline. We will learn it from a supply chain. 3 things go with you into the week. Tomorrow, the company that kept its numbers sealed longer than any of them finally publishes the one the world has only ever guessed at, with the largest short position on the board, sitting on one side of it and $100 billion of unlocked stock 2 days behind. A $45 billion fund proved that being right and surviving are not the same trade, and that whoever holds your margin holds your conviction. And our own engine flipped 4 times in 20 hours, which is the most honest thing a machine can do when there is genuinely nothing to see. Own what cannot be called away from you. Borrow nothing against it. This is Warband as a service, Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Hold the line. Skål.